Just like strollers, moms, not every credit card is one size fits all. So, this is where you need to really pick a card that matches your business's goals. Welcome to the Moms Makin Dough podcast. I'm your host, Kendra Hewitt. And on today's episode, we are going to answer another listener question, which has been really fun for me to put together this episode today. And it's on building your business credit like the boss babe you are. So, um, let's talk about building your business, using another tool to build your business. Your personal credit is something I covered last week, but your business credit is a whole different animal. And this is what a tool that you can use to really start to not only scale, but grow your business if used correctly. So, the reason why I wanted to talk about this is I do get a lot of questions. How is it different from personal credit to business credit? And it is very different. And I always want to kick off this episode with just like my number one rule, which is going to be the best time to get credit is when you don't need it. So now, if you are just like this is a part of your financial strategy. It should be part of your financial strategy for maybe not even growing your business, but it should be something that also should just be put in as I like to say, as a protective backup plan. So, and I find that one of the biggest myths about business credit is, first of all, if you have shitty personal credit, that's a whole other story, which, like I said, I covered on episode last week. But one of the things that is really important to understand here is that business credit is different from your personal credit because real business credit, there is some sort of kind of what I call, I don't wanna say fake because it is credit, but there's a personal guarantee or it looks at your personal financial, statement, that sort of thing. That is really not what I'm talking about today. I'm talking about business credit, and the biggest myth I find here is that often you think you have to be like a big corporation to get this. And that could be nothing could be further from the truth. There's a couple steps. I'm going to go over them today in a little bit of detail. But as always, because this is meant to be educational, it is not investment or advice. So I'm not a financial professional. I'm not a CPA. I'm not a tax attorney. So I'm going to refer to those people in this episode because all of them, your financial team, is really critical to this business credit profile. So the first step, and the reason that brings me to the first step, which is going to be incorporating your business. So how is your business set up as an entity? This is where you should be consulting with a asset protection attorney, a business attorney, possibly even a tax attorney could answer these questions. I find that a lot of people that when they ask me about building business credit, can you build a business at credit as a sole prop? Yes, you usually can do that. You'll start once your business is established, you start getting offers. That's pretty common. The question is that like for you, are you going to have to personally sign for it? If business credit is showing up on your personal, it is not really business credit. So, the first step in actually starting to build your business credit profile is to incorporate your business, whether that's an LLC, an S corp. It is a lot of people think that having an entity is for protection mechanism, which it is. But it's also a tax strategy, which we've talked about before. And for you to incorporate your business, you also get the most important part when it comes to building your business profile, which is going to be your EIN number from the IRS. And the EIN number is basically how the IRS is going to start referring to you and tracking you. And I know that that sounds scary if I put it that way, but reality is this is a really good thing because your EIN number, employer identification number is what it stands for, is applied through the IRS. When you set up a business entity, you are now able to apply for an EIN. It's very short process. It's almost all digital now. It's very easy. I think it costs like a couple $100 now. But it's the start of you getting an identifier that separates you personally from your business. And I would say this is step number one. Again, this is where you really are going to want to consult with a legal professional and or tax professional, possibly both. That's what I do. About what is the advantages and what is your long-term goals of how you need to be set up as an entity. I'm actually going to dedicate a whole other episode to this entity structuring because it is that important to your business. I'm going to share some of the lessons I learned along the way. And I'm going to be looking for an actual attorney that I will be interviewing to go over this from the actual professional standpoint. So, if you know anybody, let me know that you love and trust. So, step number one for building your business credit is going to be incorporate your business in whatever entity fashion that is that works for your specific business. The second thing is sounds so obvious, but it is something that I often find is not done, especially if you started your business kind of by accident, which does happen, or it was a hobby and it evolved into something else. I see this often now with like Venmo and PayPal accounts. People that, started a business, didn't really intend to turn it into something, and then it gained momentum, where this second step is actually opening a very viable business account, not mixing. Personal and business money is a huge, huge no no, not only to the IRS, but it makes it so confusing for you. And it also allows you not to be really treated as a business separately. As if you're a sole proprietor, um, there is a lot of pros to that in terms of the setup, but then there's more I find disadvantages to being a sole prop. And like I said, there's no protection. There's no separation, I like to say, between church and state. This is a huge thing that I find a lot of business owners make from the very beginning until they have professional people helping them, which is mixing their personal money with their business money. So making sure you have a actual open business bank account. To open a business bank account, it requires you to have an employer identification number, which is step number one. Number 2 is, or actually number 3 is going to be get listed with Dun& and Bradstreet. So I want you to think Dun& and Bradstreet is kind of like the Experian or TransUnion, credit reporting service. So Dun& and Bradstreet is the listing. It is also referred to as a DUNS number, DUNS. It's actually D hyphen, U hyphen NS. If you put into Google or chat, and you write, how do I get a DUNS number? It's actually is going to take you to Dun and Bradstreet's website, where you are going to apply. You will need an EIN number, and this is going to start putting you through an application process. I do believe there's a cost to it now. It used to be free. I don't think there is any. It is anymore. Where you put in you pay application fee, and it starts registering you as a business, where it's going to start to track how how much credit you have, if you have offers available, this sort of thing. It is the same way that you would track like personal credit, except this is the business part of it. The DUNS number is huge, and many companies do not know that this needs to be applied for. Sometimes I find when you open a business, they start sending them to you. But I realized that even just starting another business last year, I have not got anything from them. So I have to, and actually prepping for this call on this episode helped remind me that on the newer company we have, that I haven't done some of these steps. So one of my action items after I get off this call is filing for a DUNS number for one of our newer businesses. So that's step number 3. Number 4 is you going to want to open a business card, credit card, and or what is called a net 30 account. Now, there are many, many companies that offer net 30 accounts. Usually they are some sort of, it can be very industry specific, but like you can look at companies that supply like business goods. Like there's a company called Uline, Uline. There's a company called Quill, I know, and they are bigger companies that offer credit terms, but they do report to Duns, and they are something that you want to start going your history with them going on, where you buy something from them, they give you net 30 terms, and you pay on time. Now, you can definitely do this with other people like vendors of yours, but the vendors might not necessarily report to something like the Duns. So, Dun and Bradstreet. So I want you to just really look at what are your options for business credit cards. I'm going to talk about today on this episode a couple that I researched and went into, a couple I use myself. And we're going to focus again on this number 4 with opening a business credit is like, what is your intention with the card? So we're going to talk and get into that in the next section. And then the fifth step on just to get you going that we're going to cover today is one that is my favorite. Of course, I had to bring my favorite into it, but it's one that's actually where this really shows off another way of why this I'm so passionate about this and why it is so important. And that is paying yourself consistently from your business. We're back to step number 1, pay yourself first. Why? First of all, this loops back to number 2, which is opening a business account. First of all, you want to keep your finances clean. You do not want to be mixing paying for groceries with your business money and counting that as you pay yourself. Nope, doesn't work. You can try it for so long, but then and eventually I can tell you 100% in multiple ways that's going to bite you in the butt. So this is why I teach and harp on the habit of paying yourself first, even if it's a small amount, just to establish the habit. But it also builds trust with lenders. And another thing, let's say you own a business and you're going to apply for a mortgage, which now the mortgage industry is changing so rapidly because like rules have to change all the time with in terms of lending terms. And one of the things I find is that one of, the great things is that you can show is that they wanna see history of how you, have also built trust with not only paying yourself consistently, but also built trust with lenders. So let's say you had, you bought a piece of equipment, they financed it. I like to keep all of that stuff where I keep a record of all of it, including when I do the payoff, because I really want to show, hey, there's some times when I digitally want to, not, I should say, digitally you upload this stuff. But also, like, let's say you're meeting face to face with a banker, which still can happen in this day and age of digital. And you're building a relationship. And I'm going to tell a story here that I think is really, really critical that I actually didn't think about till this moment. But when we first started our practice, I had some history with building business credit. I had a client in my old company, my marketing company for professional speakers. I had a friend and client named Dustin, and that was his product. Is he taught people at the time, God, this was 20 plus years ago, how to build their business credit. And here's what's cool: those top 3 rules I went over, the incorporate your business, open a business bank account, and get listed with Dun and Bradstreet. Those were his 3 steps, and there's still the 3 steps that apply to today. And but when it comes to this pay yourself first one, what is really critical to understand is that like you don't want to if you have history, you can leverage that into a different business even before that business has history. So, I had lending history on my previous company prior to starting our practices in 2010. So, I had a marketing company, I had borrowed a I had a line of credit, and I also had what's called a term loan, which they give you a lump sum, and I had used that to fund some of the hiring of my, original company, my marketing company. And, this was before, like, social was really popular and anything was like, there was no digital banking, right? So I had a face to face. I'll never forget her name or her face. She was so pleasant. Her name was Doreen. And Doreen, I was referred to Doreen by my mom. My mom had a really good history of business banking with, this particular bank at the time. And, I went in there and I showed some of my numbers on what my business was doing. and told them what my intention was, and they gave me my first line of credit. And it was a very small line of credit. I think it was $10,000, maybe 20. And I just remember how excited I was that day. Well, then fast forward to 2010. So that was probably early 2000s that I got that original line of credit. So 10 years of history with this same business bank. This was, like I said, before there were options like online banks and programs that we're going to cover today. And I went back to her, and I said, "Hey, I'm opening another a business with my husband. I wanted to leverage some of my business and personal credit that I've had in terms of my history with you, and I wanted to apply for this loan." So I ended up applying. We didn't have a loan. We bootstrapped our whole business at that time. We had a loan, very small loan from a family member to get us our initial equipment purchased. So now I didn't need this line of credit. Like I said, rule number 1 is apply when you don't need it. And I went and I approached her and she was like, "Yep, just let me know when you're ready, and we'll go through it." Well, in the meantime, I had built another relationship with another smaller business banker, and they had different rules for lending because they were such a small bank versus this was a more medium-sized bank that I was originally at. And I went into her and I said, "Listen, we're starting up." She knew what our business was. She had come in as a potential patient, started care with us, and she just really took a liking to me. And because I had some background on what needed to be presented to her, I basically went to her and she gave us, this is when we were less than 3 months in business. I'll never forget this. We opened in October 2010. We were up and running, and this was by the end of the first end of fourth quarter, December 2010. She gave me a line of credit for $75,000. And again, I had no intention on what I was going to do with this. I just wanted it there for when I got to the point that I either needed some sort of, I wanted it really for myself at peace of mind at that point. But if we had something we wanted to buy, that I could already be in a place where I had pre-negotiated financing. So, um, fast forward years later, I just kept increasing that line, and I kept having the documentation that I could support that line. But that was my initial phase of building my business credit in phases when it was a face-to-face interaction, which again we're going to talk about today. But one of the things that I wanted to say is that this comes back to paying yourself first, because I remember when I went to go continue to build trust with her, I had to keep showing her the growth of where we were going, tell her a little bit about what I wanted to do. And also, I just could prove that I was also paying myself and I was sustainable with, on the personal side, that allowed her to build that trust and continue to look forward to building that relationship with my business. And I had a very successful relationship with her for years until, like I said, a lot of stuff changed in terms of access to credit really became much bigger. And I no longer needed that small little bank, and I needed some new things. So even though I've maintained that line, I've added different strategies to it. So this is where you really want to start to think about, like, what's your short-term plan and what's your long-term gain or game for building credit? Like, what is the purpose behind it? So, when do you want to get business credit? Like I said, before you need it. But as I said with that story I just shared, is that you really do need to have regular revenue to be able to continue to increase it. But you don't need to necessarily have regular revenue to ask for it. Ask and you shall receive, right? Knock and it shall be opened. So I want you to just really come to this conversation with knowing that there's a possibility that you might not have revenue yet, but you could still start this process right now of building your business credit. And if you do have a business, there might be some steps you need to go back and correct before you move forward with the business building credit process. So, and you also want to ask for business credit when the best use of business credit, which I'm going to get into a little bit more detail, is when you actually need to scale. Not necessarily before you have these massive profits. So you don't need to have you should definitely be profitable, but you don't have to be able to show these massive gains to really have access to this credit. And there's all different levels of credit. You want to build separation, like I said, between church and state. When it gets comes to business credit, this is between building separating you personally from the business, and it includes that gives you risk reduction on your finances. It also like, I know many business owners that, like, finance a lot of stuff on their credit card when they get started, their personal credit cards, and that consumer debt not only crushes you personally, but also it's really not motivating to wanna crush personal debt that your business incurred. Um, and this is where, like, you wanna get really start to shift that mindset of, like, you are separate from the business. You're the owner, the operator, probably the CEO is what you're working towards, where you don't work in the business as much regardless of what type of business it is. But this is where the goal of building business credit really should be to build some separation between church and state. And then the third thing of when you really want to look at getting business credit is when you have larger investments and or a long-term vision of where you want to go. Maybe you need to add team members. Like I said, that's probably my favorite one to use business lines of credit for. I also find that a lot of people, if they have inventory, this is really where they need to, or if they need to purchase assets, like a for us, we financed our X-ray machine and, like, things like that we need to actually make our business model sustainable and also grow. And then things like, that I see a lot of people use now too is, like, when they get to this place where they need to start spending some money on advertising, but it's not quite profitable enough without them stopping paying themselves. So this is where you really, start to refine, like, "Hey, what is that list of what are the things that I'm looking to do with credit before I actually go for it?" And you want to have a plan in place to do so. No questions asked. There is nothing worse than taking the half part of what I said, which is when do you get credit when you don't need it? Yes, you get credit when you don't need it, but you only use it when you have a plan in place, is the other half of that truth. So, just thinking about all those options for you, that's what I want you to be thinking about as we start to transition into what does building business credit. There's two really parts that I like to focus on that most people have access to. Most people know they have access to, like, sometimes you can structure a family loan of some sort. There's some people that have cash that they would just like to move around and they're willing to angel invest it where you pay a specific rate of return. Usually that's pretty good rate of return for them. And it's a cheaper way for you to get money because it also has no closing costs if you're doing that sort of thing. There are costs associated with getting some credit lines, but that's different based on what type of product you're looking at. So let's do a roundup of some of the best business credit cards because that's definitely the easiest way to start. And number one is I really like the Chase business products. So there's two cards I like Chase Inc. Business Preferred and Chase Inc. Business Unlimited. I'm just going to reference my notes to make sure I quote these and name these the right way so you can look at it. Okay, why do moms love the mompreneurs and business owners love the Chase Inc. Preferred? This is the one I like. This is the one you can use travel rewards. It's best for your common business expenses, like really trying to put everything on it, paying it off at the end of the month. There's usually a massive intro bonus, and it's great for travel for business in terms of points. This one I'm really a dork about because I'm super into right now, like getting travel paid for free. I'm not there yet. I am a work in progress on this, but it is leveraging my points and my spending that I'm already doing to get perks. So the Chase Inc. Business Preferred is that number one card for that. Then there's Chase Inc. Business Unlimited, and this card is going to be a cash back card. So doesn't typically have a, annual fee, and there's usually a 0 intro on purchases. So, the reason I'm going over this with you in detail is I did a lot of research on this before I presenting this to you today because I want to save you some of that time. Another product I like, but I should caveat this. Chase is a bank. Obviously, it's a big bank. Um, but they usually have offers out there. So it's depending on your business history, it is usually pretty easy to get like through that application process, even if your line isn't so great. When I just opened our other business, Weaponized Wellness, we went through Chase for the first time. We've had a really great experience with them coming from a very small bank to a very big bank. And there's a lot of bonuses to it. But with that, one of the things I want to share here is that they gave me a credit card right away. And I want to say they gave me like a $10,000 line because they want to see like, hey, what are you going to be spending? And also, they are going to look at on that front, they're going to look at your personal credit to leverage that business credit. However, it doesn't show up on my personal credit. It shows up only on my business. That's what I want. And then I just got a notification that they raised my line to 30,000 or something like that, without me even asking. So, the reason is they see my payment and my usage history. So, I want you to just really kind of take into those factors when you're deciding what kind of card is right for you. The third card I'm going to talk about is the American Express card. They have a blue business. Now, here's a caveat with American Express. I like American Express. Their customer service is excellent. I have found, but things that I don't like. American Express very rarely has 0% offers. Things that I like, point system is amazing. It's very easy to use. And American Express does have a lot of other benefits that cards don't have, like rental car protection and stuff like that. Ask me how I know that. I used it and needed to use it one day. So, this is great. American Express is great for everyday spending. They often you get rewarded for smaller frequent business purchases. Like, let's say, you put all your staples stuff on office supplies on one card. You can pick, like, categories, and you get more points for those specific categories. I like that about it. Um, and the thing about American Express I don't love is sometimes they have a lot of fees associated with it. Like, we have one card right now that has, like, a $795 fee, and I'm like, "Why do we have this card?" But when I was doing this research, that's reminded me that I needed to dig in and get into that stuff. So, like I said, creating episodes and your listener questions really help me too. Then there's Capital One. Capital One is probably going to be the easiest card to get if you are a newer business. The Spark Cash Plus card. Then one I love, Brex card for startups. I just found out about this card. I did some research again. This is no personal guarantee. Again, very important when we're looking at cards. It is good for a person who's just learning how to separate their personal and their business finances. There is no personal credit check. You get points on categories. Again, you select them and they do integrate with QuickBooks. That's also something I look for in all my cards that I can integrate with QuickBooks or Xero or any accounting software, what my options are, because the easier you make it to reconcile a statement, the better. And then another one I have found, why I should say why I find a lot of moms love the Brex card. Again, I can't speak from experience with it, but it builds business credit without tying your personal credit. If you haven't done some of those free three first steps I talked about in terms of like have an EIN, um, have a business bank account, all of those kind of things you're just starting in, or maybe you've been in business and you just haven't had the reason to do that. I'm telling you right now, that's the reason to do that. But this is a really good starter card. Then the next one I came up with was Divvy Business Card. This is great for budgeting, and this is great for if you have multiple team members using your card because you can kind of set preset limits. Again, no personal experience with this card, no affiliation with it. However, I do have a couple clients. That's how I found out about it, that this is what they use when they have multiple employees that need cards. And it's great to avoid overspending because you can put caps on even yourself. So if you are starting out, the divvy might be also another good option just so you learn the habits of what you can and can't spend. And I like to say, Just like strollers, moms, not every credit card is one size fits all. So, this is where you need to really pick a card that matches your business's goals and your intentions with the cards. Like I said, I'm really hot and heavy on the free travel right now. I'm starting to study a bunch of all of these websites and bloggers and influencers that teach you how to like literally travel like luxury style for free. So I think this is going to be like my new hobby. So I am really heavy on the points cards right now with the points for travel. So again, those top two would probably be Chase and American Express. Okay. Also too, one more thing that I found with American Express. American Express has a little bit more, criteria on how they, look at you. So, if you are newer or if you've had credit, like, blemishes in the past, I would highly suggest that you start with the Chase card or the Capital One card, not the Amex. Um, and then final thing I wanna flow man, I can't believe I've talked about 30 minutes on this. Man, this is how, like, I'm such a dork, but I hope you're benefiting from it. So, I want to talk a little bit about, in closing, the difference between traditional banks, credit unions, and getting a line of credit versus the new online banks. Because, like I said, when I first started this game, the online banks did not exist. And now the market has changed so much. It's like literally every day I'm getting calls right now because our newer business is a year old, so they're all looking at my history now and they're like, "Holy shit, we wanna give this woman money," which is funny because it's like when you need money, no one will give it to you, but when you don't need money, everyone wants to give it to you, which is a good problem to have, right? And that's a problem I hope we all have. So, traditional banks, we're gonna look at they have an established reputation, may offer larger credit limits because you are going to have different criteria for borrowing. Also, sometimes in a traditional bank, you can bundle services such as like a checking account, merchant account, loans. It's very easy to toggle in between, although I have to say that's getting a lot easier regardless of the bank now. Um, and they are often required a traditional banking relationship. We're talking your Chase, your Wells Fargo, your Bank of America. Um, Again, something that I kind of really avoided for a long time, but now I am very happy with Chase, my business banking relationship with Chase, and it's starting to grow. And I'm starting to grow my relationship with the business banker there, and even possibly moving some of my personal money there. So, the cons of this. First of all, I am a huge supporter of the SBA, but also there is lots of cons to SBA loans. If you are going to a SBA type, usually you have for an SBA loan of some sort or a SBA backed line of credit, you're going to have to look at the bigger banks, because that's who they work with. You are going to have to look at stricter approval requirements. So here's the thing. If I know that possibly I want an SBA loan, let's say I rent in a building right now and I'm thinking about buying my building within the next 5 years, I would definitely be building a relationship with a traditional bank because I know that my traditional bank is going to have options for me for SBA financing for even purchase of an asset for my business that a smaller bank that is not SBA affiliated is not going to most likely have. So, unless you have, very expendable cash that you want to be putting into a building, this would be a really good play to start this relationship now, knowing that that's on your long-term goal. And that's why I'm saying is that intention is everything here. Cons, they're going to have stricter approval requirements, slower process. Talk about paper pushing, like so painful in a bigger bank. Although my experience with Chase has been much better than I had anticipated or have had in the past. May charge higher fees. Man, you want some fees? Try to close on an SBA loan. They really get you because they look at that risk, right? So they have less flexibility for sure. They are much more traditional. So that's why I like to say your next best bet is probably going to be things like credit unions, where you're going to look at lower interest rates on lines of credit, more personalized service. You want to They know your name when they walk in, and they cater to that smaller business, that smaller entrepreneur, feel. I find that even in the build out of how their locations are set up. Member focused, might be more flexible with newer businesses, and especially if you have less than perfect credit, because like I said, this isn't going to show up on your personal credit, but they are in most cases going to run that. They want to see, how do you perform personally? Because here's the thing, I talk about this all the time, is that women that run businesses that have broke businesses, it's usually their personal finances are the source of that challenge that's carrying over into their business. So really looking at your personal stuff, they want to see that. And this is where that shift in your mindset of how you're handling your personal money is going to cross over to how you handle your business's money. So, there's always room for shifting in that, myself included. May consider alternative underwriting factors. Like they might look at your banking history and like Therese, my banker, did originally with my line of credit. She was like, "Hey, you've been with us for this long. We're ready to up your line. These are the this is the things that I just want you to show me, and then we'll do it." And it was literally almost a phone call, just a phone call. Cons. You must qualify for membership. I don't know what that really means. That was something that came up when I looked into this. Um, and I think it's based on like location and that sort of thing. There can be locale requirements. Fewer branches or ATMs, that's the biggest thing I run into with credit unions is that like sometimes I have to really drive for the actual location because they don't have many of them. May have online limited tools. I have not found this to be a factor with the bank I use, the credit line company I use. Lower credit lines compared to big banks. This is true. They typically will give you a lower credit line, start you off at a lower before they're raised to upper, and they do have different thresholds. And then finally, let's come to online banks. Online banks. These are going to be your things like GoFundMe, Fundbox. Um, I think it's called GoFundMe, and then Cabbage. Um, Different Bluevine is one of them. Even I noticed QuickBooks, Intuit now has a product. Rocket, mortgage company has a product for businesses. So, again, no affiliation. I'm just throwing out some of the ones that are more I know, basically through clients, but also through just like even if you search it, these are the ones that are a little bit more, that come up. So, pros, fast application, usually 24 to 48 hours. That's definitely not what you're going to see in a traditional bank. Great for newer businesses or solopreneurs. Often have lower documentation requirements. They are mobile friendly, super easy to manage online, and most of them offer some sort of flexible payment schedule. Now, here's the cons. Now, again, take this with a grain of salt because I have not used these. I'm sharing the experience of some of my clients that have, and majority of them, I would say, have had a great experience with the online banks. And again, this is a great place if you have a little bit blemish credit, but you have some business numbers, you can kind of go that away, but the cons are going to come with that, right? They are going to charge probably higher interest rates than you would get at a traditional bank. They do not all report to business credit bureaus. So when we look at that DUNS number, if you're trying to build business credit, that might not help you, even though they gave you a loan. They do not have in-person support. Like, how frustrating it is with, like, if you have a problem with Facebook and you have to literally message them and hope that they get back to you in some there's no physical human you can go say like, "Hey, I got locked out of my Facebook account. Can you help me?" And they have smaller credit limits. So they're usually going to send you a loan. I keep getting when I log into my QuickBooks, it keeps saying like a specific amount because it's calculating the amount it wants to lend me based on my profitability. So, obviously that's different in different businesses. So, that is some of the cons that I find about the online banks. So, um, E I thought this was funny, I wrote this up after, is like, I want you to look at traditional banks as like the strict aunt. She's has all the money and she's willing to give it to you, but she's got lots of rules to give it to you. And then credit unions are like kinda like the sweet grandma. They really wanna help you, and bend the rules a little bit to help you get successful. Versus online banks are your tech savvy cousin who lend you will 5K via an app and text you a meme right after. But at the same time, they're like, hey, I want my money, but this is what it's going to cost you. And you have to do it like these are the rules around it. And they make the rules and they often change the rules. So I just want you to think about it that way is that is there's lots of options for you to build your business credit and get business credit. And I'm gonna put hopefully a comparison together to put with this episode just so you can really look at that in a nutshell as you're starting to set your intentions of, hey, what do I want to create for myself when it comes to building business credit? And again, just like anything, it's going to come down to intention is everything. Are you like me where it's like it's kind of a game at this point to get credit and get points so that I can get a flight for free? I'm so excited. We just booked flights to Croatia for our anniversary and it was like $5,000 in flights and I got about 50% of it covered in with points. And that was like, man, that made my day. So, I just want you to think about that. And also too, I want you to think about when it comes to business building credit, your action step from listening to this episode. If you made it all the way through, that means you're very serious about doing this is first of all, I want you to just get in the game and just think about one step you could take to build business credit. And the second step I want you to take is really just say, hey, like if I got this line of credit, what would I do with it? Would I just have it as, like I said, peace of mind at the beginning? Do I have an intention or a plan for it right away? And that way you're not taking on credit that you're going to spend haphazardly and that's going to put you in more debt and crush your cash flow because you're going to be doing debt repayment instead of paying yourself first, which is, like I said, step number five of getting started. So I'm just in review. Let's go over um, those things that we talked about in terms of the 5 steps for just getting started with it. And that's going to be number 1 is look at your business's entity structure. So incorporate your business if you haven't already because you're going to need to get the most important part of this, which is going to be your employer identification number, your EIN, also known as a tax ID. And then the next step is going to be you're going to open your business bank account if you haven't already. You'll need that tax ID to be able to do so and commit to not commingling funds if you are already doing that, just cleaning up that habit. If you shift anything from this episode and don't even try to build business credit, but you do that, it would be well worth your listen. You're going to get listed number 3 as, with Dun Bradstreet. So you're gonna apply for Dun Bradstreet, which is going to start building and tracking your business credit file. This is where we're going to your business is going to start having a record and report of its data of your credit history, the credit history for the business, not you personally. And then fourth, you're going to open a business credit card or a net 30 account if you're just getting started and you want just some practice with getting credit and paying it off. And then the fifth one, my golden rule, pay yourself first. It's way easier. It's not as easy as it is to say. But this is really to build trust with not only lenders, but yourself and start rewarding yourself. Because remember, the reason you starting your business in the first place was you had a passion to serve whatever audience it is that you currently serve and or if you're just starting, you're passionate about serving a specific sector. And I want you to really think about is that paying yourself first should be one of your first business goals. And is something that needs constant revisiting and something that is very important when it also comes to building business credit is the consistency in paying yourself because it's also what you don't want to have happen is that you get consistent with paying off your debt but not yourself because that's not going to put you in a good situation for the future and to on a path of abundance rather than scarcity. So, I hope this episode was super helpful for you guys. Very excited to hear your feedback and your wins on getting your first line of credit or your first business credit card. and starting to use it and leverage it for good. And remember, like I said, the purpose and the intention behind building business credit is not only to have a credit file, but also to have some ability to not only sustain your business, but hopefully to help it grow. That's when it's leverage the most effectively, whether it's purchasing an asset for your business, whether it's scaling by hiring someone, or maybe it's purchasing inventory for something for you to grow your sales. As long as it's growth related, not just survival mode, then I am all for it. So remembering to always revisit what is your intention for building business credit in the right now in the present, but also mostly focusing really in the future. Thanks so much for listening to the Moms Making Dough. If you liked this episode and found the information useful, please, please, please share it with someone that can use the info. And then don't forget to rate, review, and subscribe to Moms Making Dough. That really helps me. And it also gives me a lot of insight on like what resonates and what's landing. And I would love, love, love for you to direct message me any questions or ideas, topics that you would like to have me cover in a future episode. See you next time on Moms Making Dough.